How to trade the GBPUSD pair on October 2. Simple tips and trade analysis for beginners. Wednesday trade review. 1H chart of GBPUSD on Wednesday. The GBPUSD pair was also influenced by macroeconomic factors. Since there were no major UK data releases during the day, the British pound avoided participating in the early morning decline that affected other currencies. Given the generally unfavorable macro and fundamental backdrop for the US dollar, the pound continued its steady appreciation. The sell-off in the dollar accelerated after the release of the extremely weak US ADP employment report. The subsequent ISM manufacturing PMI came in slightly better, which helped the dollar recover briefly. However, it's important to remember that the US government has entered a shutdown, the trade war is ongoing, and the Federal Reserve is still leaning toward cutting rates 2 more times before the end of the year. Therefore, we maintain our bearish outlook on the dollar. On the hourly chart, a descending trend line was broken a few days ago, indicating a shift in the short-term trend to an upward direction. The technical picture also favors continued growth in the GBPUSD exchange rate. 5M chart of GBPUSD on the 5-minute time frame. Price movements yesterday were volatile and erratic. During the European session, the pair repeatedly attempted to either bounce off or break through the 1.3466-1.3475 area. However, a clear directional move only began after the release of the ADP report in the US. It was practically impossible to react to the initial buy signal in real time. The first signal the new traders could realistically act on was a bounce from the 1.3529 level. After this bounce, the price returned to the 1.3466-1.3475 zone, allowing for a modest but successful profit on the trade. How to trade on Thursday. On the hourly chart, GBPUSD has completed its previous downtrend. As we've stated before, there are no fundamental reasons for the dollar to sustain any long-term growth, so our medium-term outlook remains bullish for the pair. Recent developments in both the UK and the US temporarily supported the dollar, leading to justified short-term gains. However, the overarching fundamental picture still works against the greenback, and the downtrend is over. On Thursday, GBPUSD may continue to rise. A bounce from the 1.3466-1.3475 area will once again create opportunities for long positions targeting 1.3529-1.3543. A confirmed break below the 1.3466-1.3475 zone would shift focus to the downside, making shorts toward 1.3413-1.3421 relevant. Levels to watch in the 5-minute time frame: 1.3102, 1.3107, 1.3203, 1.3211, 1.3259, 1.3329, 1.3331, 1.3413, 1.3421, 1.3466, 1.3475, 1.3529, 1.3543, 1.3574, 1.3590, 1.3643, 1.3652, 1.3682, 1.3763. No major economic events are scheduled in the UK for Thursday. The US will release weekly jobless claims, which are typically considered a secondary-tier report. As such, today's market movements may be weaker, but also more technically driven. Key trading system rules: the strength of a signal is determined by how quickly the signal forms rejection or breakout of a level. The shorter the time, the stronger the signal. If false signals trigger 2 or more trades at the same level, all subsequent signals from that level should be ignored. During the flat sideways market, false signals are common or non-existent. Either way, it's best to stop trading at the first sign of range-bound movements. Trades should be open between the start of the European session and the middle of the US session. All trades must be manually closed after that time. On the 1H time frame, D indicator signals should be used only during trending markets and when supported by a trend line or channel. If two levels are too close to each other 5 to 20 pips apart, treat them as a single support or resistance zone. Once a trade moves 20 pips in the desired direction, the stop loss should be moved to break-even. Key chart elements: support and resistance price levels, targets to consider when opening buy or sell trades. Potential take-profit levels can be placed near them. Red lines, trend lines or channels indicating the current market direction and preferred trading bias. MACD 14-22-3 indicator, histogram and signal line used as a secondary signal generator. Important speeches and news reports always listed in economic calendars can have a strong impact on currency movement. Therefore, during such releases, it is advisable to either trade with extreme caution or exit the market altogether to avoid sharp reversals against the prior trend. Note for beginners, not every trade can be profitable. Developing a clear strategy and adhering to solid money management principles is the key to long-term success in forex trading.